Welcome back into Wave 3 Listens Live. I'm Michael Vanover, joined now by a regular of the show, Marcus Warren, the founder and CEO of Warren Wealth Management and Tax Planning, joining me now. Marcus, welcome back.
Thank you.
Thanks for being here.
Yeah.
You had a good vacation last week, right?
I did. Went to the great state of Hawaii.
I've never been. I want to go. I was on vacation in South Carolina myself, so your place is a little more exciting. Yeah. But anyway, it's good to have you back. All right, so we've got an interesting topic today, but before we get to it, in case we have some people that are watching for the first time, give us a little bit of background on Warren Wealth and just all the services that you provide.
Yeah, so Warren Wealth Management and Tax Planning, we are a fiduciary financial planning firm that focuses on pre-retirees and retirees and some small businesses. And then also we are a tax planning firm that basically focuses on strategies and ways to minimize taxes as you enter retirement. So where we add the most value is that in addition to that investment management and the financial planning side, we also do that tax planning in-house. And once you're retired, those things are very connected. And so it works out well for the clients.
Now, taxes, I feel like it's always in the news, right? Taxes are always in the news, and it's nice to talk to somebody that really knows this front and backwards. We're going to talk today about tax avoidance versus tax evasion. Yeah. If you can start off by just telling, what exactly does that mean? So, you know, the reason we're talking about it is simply because the idea of tax, I guess, dodging, so to speak, has been in the news a lot lately. There was a report a couple of weeks ago that came out basically highlighting the billionaires out there, the Elon Musk, the Bill Gates, Warren Buffetts, who, in relation to their wealth, they pay very little in taxes percentage-wise, right? And really the idea of billionaires paying a small percentage of taxes in relation to their wealth, it really isn't big news if you know the tax system. However, with that report that went out and, you know, the growing gap between the rich and the poor, I felt that it's important to talk about and really distinguish between tax avoidance and tax evasion. Well, I think a lot of times people see those stories, right, and they get angry. And they say, that's not fair, and whether they're right or wrong, they're playing the system, right? And that's what you're here to talk a little bit about today. Versus, obviously, it doesn't seem fair, but how do they pull that off? Well, the biggest difference between tax avoidance and tax evasion, really, for the most part, is an orange jumpsuit, right? You're going to go to jail if you do tax evasion, right? That's right. So, and you know, when we talk about tax avoidance basically is utilizing legal maneuvers to minimize your tax burden or your tax bill, right? Tax evasion, on the other hand, is utilizing illegal maneuvers to minimize or hide assets or income from the IRS, or basically take deductions that you're not entitled to. And you know, when you think about it, you know, it's not just the billionaires out there who utilize these tax avoidance strategies. I want to ask you a question. All right, we can talk. No one else is listening. That's right. It's just us. So, plus, this is good for you. So, do you give money or things or donate to charity? Yes. Yes, you do. All right. So, when you do that, do you deduct those donations and what you've given to the charities? Do you take that and deduct that from your tax return? Yes. I keep track of all of it and then give it to my CPA. Yep. Good for you. You are utilizing a tax avoidance strategy, right? You are using what's in the tax law to minimize your tax burden, right? And so when you think about it, the tax code is about 2,600 pages long, right? All right. And within that tax code are a lot of tax avoidance provisions, meaning tax loopholes, right? Tax loopholes. And you can utilize those avoidance strategies to minimize your tax bill. And, you know, when you think about it, that is what everyone is basically trying to do. And so there are a lot of different tax avoidance strategies that are out there. I think it was on the screen earlier, but you can do things like take that pre-tax income or that pre-tax deduction when you donate, not when you donate, but when you contribute to your IRA or 401k. You can write off your medical expenses. You can write off property taxes, mortgage interest. You can hold your investments over a year so you don't have to pay ordinary income tax, so you can pay the more favorable capital gains tax. Those are tax avoidance strategies that the average American does each and every day. Now, they do it on a higher level. When you exponentially, it's that much more money. It's a whole different level. Now, okay, so you talk about, so those are some of the examples of avoidance. Yes. if people are watching right now, I feel like a lot of people know that they can write off charitable donations as an example, as one of those.
Yep.
But there's probably a lot of these things that people don't realize. What would you say is a good way to find out, those loopholes? Do they need to go to that 2,600-page document and go through it? That seems like it would be a little overwhelming.
No. So when we talk about the tax code, right? Yeah. I said it's 2,600 pages long, and within that tax code, there are red lights and there are green lights. Red lights are things you cannot do. Green lights are the things that you can do. Now, I love my CPA brothers and sisters out there. Right. However, a lot of those CPAs focus on the red lights, things you can't do, right? You can't do this, you can't do that. A good proactive CPA, a good proactive tax planner, what we do in our office, good tax attorneys are looking for those green lights. And so, no, do the viewers out there have to know what the 2,600-page tax code does? No. If you find a good proactive CPA tax planner, they can navigate and show you the green lights on how to minimize your taxes.
Now, we talked about tax evasion equals orange jumpsuit. I like that comparison. Talk about some examples of things that would lead to something considered tax evasion.
Yeah, so basically it's falsifying books and records if you have a business, taking personal expenses and writing them off as business expenses, things of that nature, underreporting income, taking false deductions, of course, trying to hide assets or hide income. Those are things that can put you, behind bars, or you have to pay fines or things of that nature.
None of those are good, right?
No, none of them are good.
All right, so tax avoidance, tax evasion, what are some of the consequences? Of course, obviously, if it's bad enough, you're going to jail, fines. What are some of the other things that you've seen?
Yeah. Well, as far as evasion, you're right. Fines, jail time. But as far as above the board tax avoidance,
if it's done right,
I mean,
that's what it's there for.
That's what it's there for. And so, when that article came out and when it was reported and about the billionaires not paying, their fair share, so to speak, or paying very little percentage-wise in taxes, it upset a lot of people. But those are legal ways that they are able to minimize their tax bill.
Well, and I think everybody, whether they were infuriated by that or not, I feel like a lot of people would like to find those legal loopholes on their taxes because I don't think anybody loves to give Uncle Sam money. So that's something to really talk about. So again, if they call over to the office, we're talking taxes today. Kind of take me through that process. Do they call and speak to you directly? Do they talk to somebody else and get set up on your calendar, free consultation? What's that like?
Well, right now we're having a workshop on Tuesday, the 22nd of June. It's on the screen at Indiana Wesleyan University, the Louisville campus. It goes from 6 to 8:30, and it's about taxes in retirement. One of the biggest expenses that you are going to have in retirement are taxes, right? And mainly because most people have saved the bulk of their retirement in these tax-deferred accounts. They haven't been taxed yet, and because of that, they are subject to whatever tax rates are in the future whenever they pull that money out. And so, able to minimize those taxes, show them how to put more money in their pockets and less in Uncle Sam's. What we're going to do is we're going to have a workshop, talk about a lot of those strategies, amongst other things.
Love that. And the class is almost full, right?
Yes.
June 22nd, 6 o'clock, almost full. So make sure you go to warrenwealth.net for more information. Again, 6 o'clock, Indiana Wesleyan University. Now, for the folks that can't make it or maybe don't get in time, they can always call the office, right?
Yeah, they can call the office. You can go to warrenwealth.net. My calendar pops up. You can schedule a quick 15-minute phone call. Tell me where you are, where you want to be, and we can see if we're a good fit.
Marcus, every time you come on, I learn something, man.
Thank you.
I appreciate it. Good to see you as always. All right, we'll be right back on Wave 3 Listens Live. Stay with us.